So you can see that our gas revenue will generate enough cash to cover our exploration. And the last thing I want to say is, if people remember, I always said, I love SASB. SASB to me is the cash engine, and also now it's a technical engine, because people come to us with projects that is going to fund something bigger. SASB is a company maker, but it's not the size of company I want. And when you look at the oil prospect, we could find 5 million, 50 million, or 500 million barrel fields.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are getting a much awaited sponsor update from Arthur Halloran, CEO of Trillion Energy. And Art, it's great to have you back on the show. So I noticed today, August 2nd, we had a news release, kind of refocusing your efforts. Can you briefly just explain what's happening with the company?
Thanks for having me back on here, because you were at the start of this program A, and now you're at the finish of program A. So the first thing I'll mention is that our last well we produced is, or put on production now, is Alapili, and it is actually on production today, and it's producing about 9 million cubic feet per day. But that's at a 20 to 64 inch choke, because we have to choke it way back so it won't back out the other gas wells. The news release today is we are not stopping SASB, because I've got a bunch of comments that now that we're not going to be drilling at SASB, it's going to be in the back burner, and we're going to focus on the exploration, and now we're an exploration company. Well, the actual reality is we are a gas producing company that's going to do oil exploration. And the reason why we're putting, and it's not really a pause, because we've always had Program A and Program B. So Program A always was 5 new wells and 2 recompletions. We drilled the 5 new wells, and we did 1 recompletion. And the second recompletion, we decided we would do the sidetracks because of the risk we saw associated with fishing stuff out of the borehole. So we put in 6 sidetracks. And all we're really doing now is sliding those 6 sidetracks into 2024, maybe mid-2024 or second quarter, somewhere in there. And the reason for that is we are doing, the 3D seismic will be finished reprocessing in September, and we'll start getting it mapped and locations coming out in October, November, December. I've already seen some of the stuff, and I would suspect that we're going to have better locations in the stratigraphic prospects than some of the sidetracks. Doesn't mean we won't do the sidetracks, but we'll have a better selection, and we might end up having, 6 or 7 good stratigraphic targets than 6 of these sidetracks. And also by that time, we'll know whether some of the pools that we are producing from right now can use a second well. So it's just going to be a better use of the CapEx. It's not that we don't have locations, and it's not that we're not going to continue. It's just that this is a good time to retone.
Okay. So as far as cash flow now, about how much is the company pulling in a month on its interest?
On this interview, this will be the first time that we have laid out the field now, because we now have the 6 wells in it. And so we can now say what's going on here with a degree of certainty and forgetting about what's going to happen in the future. So right now, at this point in time, we have 3 wells that are producing at a good rate, and we are getting about 14 million cubic feet per day of gas. And at today's price, and I worked it out, it's $11.65. So we're getting about $2.4 million US. That's ours per month. But that means 3 of the wells, we need to get better production out of it. And so another reason why we need to kind of take this little bit of a rest is we've shown everybody we can drill the wells. We have found more gas than we thought, because each well ended up having more pay. And some of the issues now is that we actually are producing gas at a high pressure. We know how to drill them. We found it. And now we're in the process. Let's maximize the production. So what's happening? So an example at Alipini well, we are producing at a 20-inch 20 to 64 inch choke, and normally we produce at a 32, 64. It's just that there's too much gas, there's too much pressure, and what'll end up happening is we end up building the pipeline pressure, and it'll back out the other good wells, say Bahanli, and we don't want to do that. So we're producing Bahanli, and we're producing Ali Pili, choke back, and Gulich is okay. But what happens is that for West Akachoka and South Akachoka, when we backed out to production, we got a water column in it, and it doesn't mean the gas is not there, because at 2 million cubic feet per day, it can't produce through the long water, because these holes are like 3 to 3.4 kilometers long, where there's no gas, the water fills in, and we have to go back in and reperf, or we have to find a way of removing that water. Reperfing, we feel, is not going to be recovering all the reserves that we need, so we're actually going to now use West Akachoka and put in a slimline ESP, which is the electro-submersible pump, just to remove some of the water to kick it back in. So getting back to my story, 3 wells, 14 million cubic feet per day. West Akachoka, we're going to put a ESP in it, because that will solve the problems for the water that's going to come in long term for the other wells. And South Akachoka, we're going to reperf that one, so that one will come back on, but eventually we're going to need ESP for that. And in Akachoka 3, again, there seems to be a fish in there that's causing an issue. So if the only well that might not come back on for a while is Akachoka 3, but that only cost us $2 million to open up, and we made $9 to $10 million on that. So that's the process, and this is just normal understanding.
Well management that we're talking about. We're kind of getting in the weeds. Point is, a lot of pressure coming out of 3 wells, holding back the other 3 wells, one of which may be coming back on, may not, but the other 2 definitely will be. We can look forward to higher production once you get these kinks worked out.
That's correct. And then I also got some emails, it's like a flurry, it's like a snowstorm, about the oil, and they say, now we're changing direction, and we have to do another raise, all that kind of stuff. And I just realized I don't communicate properly, so I'm going to take a few minutes here. So when we talk about an equity raise for SASB, if we wanted to raise $13 million, that's 1 well. If we did a $13 million equity raise for the oil field, that's 4 wells, right? But when you look at the economics, the cost, so if we're producing right now with 3 wells, about $2 million, and we got to get the other wells on, but just say we're at $2 million US per month. In 2023, to meet our commitments for the oil prospect, is $4 million before December to shoot the seismic. In 2024, our commitment is 4 wells, which we pay 100%, and including road building and everything, that's $12 million. Then in 2025 and 2026, there's 3 more wells, each commitment, but we're only 50%. That's $4.5 million. So you can see that our gas revenue will generate enough cash to cover our exploration. And the last thing I want to say is, if people remember, I always said, I love SASB. SASB to me is the cash engine, and also now it's a technical engine, because people come to us with projects that is going to fund something bigger. SASB is a company maker, but it's not the size of company I want. And when you look at the oil prospect, we could find 5 million, 50 million, or 500 million barrel field. Doesn't mean we're not going to chase off-block SASB. And also a couple of months ago, I said I'm disappointed with the reaction that the gas wells give to the share value. So I'm going to try to get something by August. And here we are. And I basically done everything I said I'm going to do.
And so refocusing, maximizing production on what you already have. Obviously, that's priority, because you could go drill a couple more wells, maybe double production. But if you get everything, these 6 wells producing, you could double production right there.
That's correct, yeah. And that's what we're going to focus on. And then once we fine-tune that, and then we go to the next phase. So phase A, we pretty well have finished. We've always said there's a phase A and a phase B, and we just slid it in the future. it's a much better return on capital because we know we can maximize the production and get the revenue faster.
Got it. All right. So the farm-in agreement that you announced a couple of days ago, I heard a quote that you said in your 40 years of doing this, it is the best prospect that you've ever seen. Did I get that right?
That's correct. And at an earlier interview, like I actually got told I couldn't put that in the news release. And it is the best oil prospect, because number one, the potential for size. Number two, it's not in the middle of Africa, so I can get a rig, I can get people, and to bring anything in there is not very expensive. And three, it's close to market. I don't have to build a pipeline 600 miles long or with any type of that kind of stuff. It's in Turkey, and Turkey needs the oil, and with the larger fields right there already has pipelines, and they're talking about building a refinery on those huge discoveries that are to the east of our block.
And the implication is this could also be a huge discovery.
That's correct. No, it is exploration, but like I say, when you look at all the potential reservoir horizons and the amount of staining you have and the huge fields around it, and it's the same zone that comes in from northern Iraq and Syria, it has the potential to be some big targets. And that's what I say, 5 million, which is not a bad size. That'd be 5 times an SASB well, because each SASB well is about 1 million BOEs, or 50 million barrels, or even a 500 million barrels, because to the north we have 1 billion on the one blocks, and then to the east another billion and a 650 million barrel field.
Well, it sounds quite encouraging. Can you just tell us a little bit about the agreement you executed regarding the Bulgarian properties?
Yeah, so I can't say who it is, because they don't want to be used for promotional, but it's a well-established, well-known, well-funded company, and they are in gas and oil buying and transportation. And we were talking to them about something else, and they just said, we heard from somebody, you have a nice property in Bulgaria. We'd like to share data and see if we can do something with you to bring this forward, which is quite good. Okay.
Hey, so prices obviously have come down from their peak during the run-up to the Ukraine war. We're down to 11. It's still higher than the $8 to $9 we talked about. Where do you see prices heading for the next 6 months to a year?
So my personal opinion is that it's not going to go down much more, and that when we get into the winter, I don't see why we can't be up to the $15, $18 range. But even at the 15, before it got to the 11.65, I might have said, you can go back up to the higher price. But yeah, I'd say $11, $15, $18 towards the winter of 2024. The key takeaway, though, is at $11, $12 an MCF, we would be self-funding for our continuing drilling, right? Because next phase, we don't have to cash call TPAO at the end of the well. The next phase, we're going to drill this well, and it's money up front. So $11, $12, we'd be self-funding for SASB. Without drilling, we can be down to less than $1.50 and still be okay.
Right. Hey, and this latest well, you got a cash call coming within a couple of months ahead of us, right? From TPA.
No, we got the cash call. The cash call will be here maybe Monday or Tuesday.
Oh, all right. So that helps.
Yeah, because so how it works is we did the cash call, I believe it was Friday. They have 10 days, but they usually pay quicker. That cash call is about 6.977 million. And then again, to explain finances to the audience here, our June bill, we get an invoice and then we have 30 days to pay. Our June invoice for drilling is about 3.2 million, and our July invoice for drilling is about 3.2 million, and we have a cash call for 6.9. We also have revenue checks coming in there. So all this constant chatter about us not having enough money, it should go away, because we're not burning any money now for drilling, right?
Right. So the rig you're basically letting go for now. You'll bring it back in 2024.
Yeah, that's correct. So my COO, they have an agreement that we have the right to call it back. And if they will get another job, they have to inform us so that we can make a decision.
All right. So you got a right of first refusal on the rig. And so that's good news. So it'll be available if you need it and when you need it. And all right. So definitely interesting developments here, Art. It sounds like it's in control, though. You're making money, which is the important thing. The cash is flowing and promises to increase as well. So, hey, appreciate you coming on, Art. Hey,
okay.
I suggest everybody go over to trillionenergy.com. All this information's contained there, a lot more. Sign up for notifications. And don't forget the ticker symbol in Canada, it's TCF. In the United States, TRLEF. And Art, we'll be touching base with you in the months ahead. Thanks so much for coming on.
Yes, always a pleasure. Thank you.
The Financial Survival Network.